Hello and welcome to TradeFlow Television,
bringing you valuable analysis and actionable intelligence
through the global commodity markets.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. Indian merchants have almost entirely stopped signing new export contracts with Iranian buyers for commodities such as rice, sugar and tea, due to caution about Tehran's dwindling rupee reserves with Indian banks, 6 industry officials told Reuters. Exporters are avoiding dealing with Iran since payments are getting delayed for months, said a Mumbai-based dealer with a global trading house. Iran's rupee reserves in India's UCO and IDBI Bank, the two lenders authorized to facilitate rupee trade, have depleted significantly and exporters are not sure whether they would be paid on time for new shipments, the dealer said. Under U.S. sanctions, Tehran is unable to use U.S. dollars to transact oil sales.
Most Ukrainian winter grain crops are in excellent condition thanks to favorable weather that could lift the 2021 harvest to a record high above 75 million tons, a senior government official said on Thursday. We understand that the weather will affect the volume, but as of now, if we do not predict any force majeure, we see a very positive result, Taras Vysotsky, Deputy Economy Minister in charge of Agriculture, told Reuters. He said the volume could include 29 to 30 million tons of wheat, 9.5 million tons of barley and at least 34 million tons of corn.
Moving on to the top news in the energy sector.
A 4-month rally in the oil futures price from below $40 a barrel to above $60 now is out of step with demand, analysts and traders say, with physical sales only expected to match supply later in 2021. The price has surged since the start of November, buoyed by expectations of an economic recovery as governments promise more stimulus, producers rein in output and vaccine rollouts offer hope that the worst effects of the COVID-19 pandemic are over. But physical demand for crude from refiners and other end users has yet to catch up, with cargoes to key markets like China broadly trading at lower prices amid sluggish sales.
Singapore residual fuel oil inventories jumped 7% to a 6-week high in the week ended March 3 as exports from the storage and trading hub dropped, official data showed on Thursday. Onshore fuel oil stocks jumped by 1.509 million barrels, or about 238,000 tons, to 19.379 million barrels, or 3.449 million tons, Enterprise Singapore data showed. SING1. The rising inventories were boosted by plummeting fuel oil exports, which dropped to a 4-1/2-month low of 129,000 ton in the week to Wednesday. Weekly figures, however, are volatile.
Next, we have the top news in metal markets.
Industrial metals fell on Thursday as a collapse in nickel prices and a jittery mood among investors on wider markets combined to drag down copper by as much as 5%. Benchmark copper on the London Metal Exchange, LME, which hit a 10-year high of $9,617 a ton last week, was down 3% at $8,833 at 1740 GMT after falling as low as $8,654.50. Nickel, meanwhile, tumbled for a second day. Having reached a 7-year high of $20,110 last week, it was trading at $16,100 a ton, down 7.6% for its biggest one-day loss since 2016.
Global aluminium producers have offered Japanese buyers premiums of $149 to $165 per ton for April to June primary metal shipments, up 15% to 27% from the current quarter, 3 sources directly involved in quarterly pricing talks said on Thursday. Japan is Asia's biggest importer of the metal, and the premiums for primary metal shipments it agrees to pay each quarter over the London Metal Exchange (LME) cash price set the benchmark for the region. For the January to March quarter, Japanese buyers agreed to pay a premium of $130 per ton, up 48% from the prior quarter. We will now look at the top news in the agricultural sector. Malaysia's palm oil inventories at the end of February likely rose for a second straight month to touch 1.42 million tons, as production picked up for the first time in 5 months, a Reuters survey showed on Thursday. Stockpiles in the world's second-largest producer were seen up 7% from the previous month, according to a median estimate of 10 planters, traders and analysts polled by Reuters. Exports were seen ticking up 0.5% to 952,500 tons, recovering from a 42% plunge in the previous month. Cargo surveyors had estimated a fall between 4.6% and 8% amid lower shipments to China and the United States.
That is all for today's news on the commodity market. Stay tuned to TradeFlow TV as we continue to provide you with more updates. You can also follow us on Twitter at TradeFlow TV1, which allows you to watch our program on your mobile device or desktop.